Welcome, students. In the previous class, um, we have studied in the fiscal functions and overview. Uh, I'll just summarize what we have studied in the previous class in the fiscal functions overview, chapter 2, unit 1. In that, we have studied different concepts and the role of the government in an economy. We were deliberating and discussing. The first one, we've discussed about the role of government mentioned or say given by Adam Smith, and the second one and the most important one given by Richard Musgrave. And in that, the role of government can be divided into three types we've discussed. One, resource allocation, and second, resource distribution or redistribution. Third, resource stabilization. We've discussed about these three things. All right. So let's quickly summarize the concepts underlying resource resource allocation. All right, just give me a second. Right, resource allocation, why government needs to do is what we've discussed. The government needs to do for a reason that market sometimes, if we leave everything to market forces, say private sector, it the production, the demand and supply mismatches will be there. So that is the reason government has to involve. So the next question that we have as a continuation, and we've discussed it, so just quickly covering it in our material as a next one. So after we completed this resource allocation, what is resource allocation function? Let's quickly look at why do markets fail as to what goods should be produced and in what quantities, right? So why do markets fail to decide as to what goods should be produced and in what quantities? The one particular thing that we've discussed, imperfect competition and presence of monopoly leading to underproduction, right? The examples that we have taken: one, vaccines; second, essential commodities like onions. So the imperfect competition means the demand and supply mismatch. There is not enough goods produced for the required demand. And presence of monopoly, for example, there are, right, the Ola and Uber. So if you know, earlier they used to give a ride at 50 rupees, say 4 years back. Now a ride for 3 kilometers or 4 to 5 kilometers easily costing 200. How this could happen? Because now kind of all other players are not there in market and they are kind of exercising monopoly. What would happen due to this? Either underproduction and higher prices than would exist under the conditions of competition. These mislead the choices available to customer and reduce their welfare. The examples of vaccine is a perfect example. Markets typically fail to provide collective goods, which are by very nature consumed in common by all people. If there's a product that is consumed by everyone, generally markets fail if it is left to market forces, right? For example, those vegetables we spoke about, vaccines, right? So electricity, police, water. What if we leave the police force to a particular private agency? Very difficult. You cannot imagine. So these things cannot be done by the private sector. So that has to be done by the resource allocation related to this should be done by government. And externalities which arise when the production and consumption of a good or service affects people and they cannot influence through markets their decision about how much of the good or should be produced. Example, pollution. This particular point, the word called externalities, we will be covering in unit 2. I'm not spending too much time for this point, we will come back, and when we are reading about market failure, when we study about market failure, we discuss there about what is meant by externality. Sometimes there are certain outside forces which are not relevant for a particular individual, still he affects because of someone else benefit. Things like pollution, I'm just leaving it here. I will come back when we are studying the unit 2, market failure, and then we will discuss one of the reasons for market failure is externalities, along with monopoly power, imperfect competition we have mentioned here, right? So there are certain things called externalities. We will discuss this in detail there. So I'm not spending time here, so that we will move to the next. And then we all know the imperfect competition, right? Demand is more than supply. Supply is more than demand. These things. And inequalities. The most important thing is this. Inequalities in the distribution of income and wealth. For example, assume electricity per watt is 20 rupees. Do you think a normal, a family can afford this? They will not if we leave it to private sector. So the inequalities, see, private sector, the middle class or the above middle class may be able to afford, but the poor will not be able to afford, right? The inequalities in the distribution of income and wealth. People, India is kind of will stand in top when it comes to inequalities of the wealth. It means the top 10 richest almost hold close to 30% of India's wealth. So that is the level of inequalities that we have. So the inequalities in the distribution of income and wealth, all of these reasons, cause the markets to fail, and the goods will not be produced in required quantities. That is the reason government has to be there in the resource allocation. What is resource allocation? Factors of production, land, labor, capital, entrepreneurship, how those should be allocated is what government sometimes involve, especially in collective goods, public goods like electricity, water, police, all of these. All right. And the continuing question for this, there is another question called why government should perform allocation function. We discussed overall, just covering it, as a question. Why government should perform allocation function in an economy? Why the government should perform? So suppose if the government is not there, what would happen in vaccine scenario? There will be riots, right? In the absence of appropriate government interventions, market failure will occur, and resources are likely to be misallocated by too much production of certain goods or too little production of certain goods. The too little production one is vaccines. I don't take too many examples so that you will not confuse. And too much production like tomato. People, farmers are not given proper onion guidance, and due to that they produce sometimes a lot, and 1 year they produce a lot, and next year they all will stop, and then there will be a shoot jump in the prices. So that all of this happens for various reasons. The market failures do happen if the government is not there. That's why what government do, government advocate people, farmers, to produce certain crops this year based on the expected demand and supply. Those things government do. So that is the reason why government should do allocation function. The allocation responsibility of government involves suitable corrective action also. Example, reducing the price of essential commodities. As we discussed, government, whenever there is a huge shoot up in the price, they'll use that Essential Commodities Act called ESMA Act. ESMA, it is called ESMA, Essential Commodities Management Act. So that they use that, and they say they put a cap on the price that people should say put the companies or the sellers should sell, right? When private markets fail to provide the desirable combination of goods and services. I hope it is clear. So we are discussing why the government needs to do this. Government which involve goods which involve huge costs that are not met by the market require government interventions to corrective measures. For example, providing employment to the people. The certain costs are involved. Unless government give the land, unless the government give the land to companies to establish manufacturing facilities, how the market, how the jobs will be generated? The government has to be there. Otherwise, the private sector's land they will use, and then they'll produce. All of that is very costly affair, right? So the government will allocate land to companies a lot of times if they are ready to provide, say, required approximate, say, 1,000 people employment, and say if 500 crores investment, government will be ready to give land as a free of cost. They'll give, governments are ready to give land free of cost. So these things are done by government. If government is not doing this, the cost of production will be too high. People will not be able to afford, right? That is the reason government should do the resource allocation function. And there are certain issues because of government doing all these functions. There are certain other side, corruption, all of those things do happen. We will cover that later in the unit 2. What are the issues of government involving in resource allocation function? And yeah, merit goods which are greatly beneficial to the society also falls under purview of provision by the government. For example, providing public libraries, midday meal schemes. The midday meal scheme is really, really, really done wonders. There were days when people were not sending their children to schools for a simple reason. They need someone, a bread earner, to be at home to take care of the children there, or sometimes to come and help them in field, as a lot of them cannot afford even 3-day meal. So if the government in schools, if afternoon lunch is provided to students, the kids, a lot of parents were ready to send their kids to school. So this has helped a lot. So if government is not doing, what would happen? The education level would have been very low, and that would not help as a productive nation. If the people are not educated, the population will act as a big nightmare if the people are not productive, right? So these are the things that government has to, in a way, provide. Government has to do the resource allocation function. Government should do that. All right. So that's about the resource allocation function, right? There are multiple ways these questions are asked, so that is why we had put different questions. So there is another question called what is meant by resource allocation, right? Let's quickly look at explain government resource allocation function. In real world, allocation is both market determined in and government determined. Government determine tax policies, all of it, and the market determines how much to produce, what to produce. Lot of goods, barring few goods, don't take exceptions. A variety of allocation instruments are available by which governments can influence resource allocation in economy. For example, government may directly produce how the government can um, you know um, do a resource allocation. The question here plus how government in how government do resource allocation, right? That's a question. In real world, allocation is both market determined and government determined. A variety of allocation instruments are available with the government. One is government can directly produce things like public transportation, right? Things like public transportation services. So government can directly do it, right? They can put and they can define the terms for public transportation like metros, rail. So railways are not, that is the reason railways are not privatized. It just started the discussion about privatizing railways, but the government would not do the public transportation. Government may influence private allocation. One is they can directly produce. Second, government can influence the private sector how they are doing. One, by providing incentives. For example, if you are providing employment, I will give you incentives, tax free. SEZ zones, have you heard? SEZ, special economic zones, where the taxes, the companies are not required to pay taxes, certain taxes, and disincentives for people, some to an extent, they can influence one side and another side. For example, government wants to disincentivize people who are producing tobacco, right? They put higher taxes. So the government can influence. One, government can directly involve and produce good. Second, they can influence, right? Uh, Third, government can influence through its policies, competition policies, right? So there are different ways that the government can influence the resource allocation function. This, for example, tax concessions and subsidies may be given to the production of goods that promote social welfare. Example like employment. And higher taxes may be imposed on goods such as cigarette and alcohol. All right, that's another discussion. Is it really helping? By disincentivizing, is it really helping the people who are buying? That's another discussion, but let's not bring it. As a policy, with a good intention, you need to look at it. So the government, one, can directly produce goods. Second, can influence. And third, government can influence through its policies, like competition commission, merger policies, Competition Act in India, Competition Commission of India is there, CCI. So this decides if there is any monopoly in the market. If you remember, when the Flipkart was sold to Walmart, there was a Competition Commission of India which scrutinized the transaction. Is it leading to online market space monopolization or not? That discussion, the scrutinization by Competition Commission of India was done. Competition Commission of India, if there are any monopoly practices there, put a lot of penalties. They put a lot of penalties on Google as well, a lot of times. So these things are done. The government, by doing this, by having these policies, they influence the resource allocation and ensure everything is available for social well. I mean, it is available to everyone. The demand and supply match. The competition is existing in the economy, in the business, right? These are the ways government influence the resource allocation function. One, government can produce. Second, can directly influence the resource allocation function. Government can do certain regulatory activities. For example, licensing. So if you want to put a bar, you need a license, and certain controls, minimum wages, and directives on location of in industry, where you need to put industry. Those things government can do. Certain regulatory activities also. Government can also set certain legal and administrative frameworks. Like, if you are doing this legal, there are certain rules and regulations that you need to follow, right? Those things will be there. And mixture of any of the above techniques, right? To simplify it, one, they can directly produce. Two, let me just put it here. How government do? One, direct production. Second, influence. One, by having there are different ways, right? One, by having influence the private allocation through incentives and disincentives. Incentivize, disincentivize. Second, put regulations. Third, restrictions, like competition restrictions. And fourth, licensing. All of this, putting certain legal and administrative frameworks, and combination of any of those. combination, right? This is how government do the resource allocation function. There are three things that you need to remember. One, what is the role of government in resource allocation function? Why government should do resource allocation? Okay. Second, how government do resource allocation function? These two questions you should have a crystal clear clarity. We discuss now how government do resource allocation, right? We discuss now why government do resource allocation. We discussed about those so-called imperfect competition, huh? Monopoly practices. All of those reasons will cause imperfect competitions in the market, and people will not get the sufficient goods required, right? Certain collective goods should be performed by the government so that it will be for the benefit of public. All of those reasons contribute to the resource allocation function of the government. All right. Next we have resource redistribution function or resource distribution function. What is this resource distribution function is something that we will study now. Right. The next one is resource distribution function. How government do the resource distribution and why the government needs to do the resource distribution. How and why we need to understand. We are discussing in the unit 2 fiscal functions, government functions related to government expenditure, revenues, right? So in this, how government do the resource distribution and why the government needs to do the resource redistribution is what we will discuss. How the government do the resource distribution is second. We will understand first why the government needs to do the redistribution. We all would have heard the various schemes that are announced by the government, right? There are various schemes that government do announce for poor people. You must be wondering why the government is announcing so many initiatives for poor people. Why? There are a lot of things. One, like giving different schemes, for example, for the farmers, giving them a subsidy, giving them some input, all of those, giving the fertilizers at a low cost. Why government is doing that? Why the government has to do that function is a question. Why the government needs to do that? The distribution responsibility of the government arises from the fact that, let's read it from the book. If it is left to the market forces, just like resource allocation, if it is left to the market forces, the distribution of income and wealth, as we already studied, the distribution of income and wealth, especially the inequalities in India. We all know the top 10 people own close to 20 to 30% of India's wealth. So it's like there are huge inequalities of people lifestyle and the income levels, right? If the government don't intervene and support the people who are downtrodden, what would happen? Their life will be really measurable, right? So that is the reason government had to do certain redistribution functions. When they get certain incomes, when they get in the form of tax, they distribute based on the requirements, especially for the poor and marginalized sector. They allocate more money, right, in the form of different schemes, right? The distribution is required. If it is left and if the government is not doing that function, what would happen? The society balance of the society, the income and wealth among individuals in the society is likely to be skewed, imbalanced. What would happen? You must be wondering what happens if they are not, if there are not if there is no balance in the income and wealth of individuals, there are a lot of issues. This will, the crime rates, the various issues that society face, the health issues, all of that do happen because of these inequalities. The poor people will not be able to afford to go to hospital and get them treated, all of that, right? Unless the government give them various schemes, give them insurance, all of it, the society, will be, the wealth, and the income distribution, if it's not properly done, and not saying equally to be done, it is done, it needs to be balanced, right? If that needs to be done, the government should do it. So the government has to intervene to ensure a more desirable and fair distribution. It didn't say equal distribution, right? The communism talks about this a lot, but general, desirable and fair distribution. Someone who's working for 8 hours should at least get a basic wage, say in a day, 500 rupees or 300 rupees. These are the basic things, right? So if the government is not having, if the government is not involving, they will be exploited. The poor will be exploited. The marginalized section will be exploited. So the distribution function of the, the classic example is the budget that government present, the budget, right? The budget is related to basic question for whom an economy should produce in goods and services. So the distribution, what the finance minister do, finance minister write, these are the incomes. This is the ways that we get income. We get incomes from the rich, middle class, and how do we distribute to poor people in the form of, say, ration, health subsidies for farmers, fertilizer subsidy, different ways the government do this. The entire budgeting process is one of the redistributive function of the government, what their receipts and how they are distributing it. So that is for the benefit of largest section of people who do not have access. So that's the reason. The question of why the government should be doing the distribution function, there are many great scholars who question the role of the government in an economy. Government, people should say government should not intervene in all of these things. Government should just, take care of the basic law and order, education, all of these. But yeah, so there are certain other functions also government needs to do, right, apart from those basic things. So the distribution function is one classic example. Let's understand the next question. Define aims of distribution function of the government. Redistributive or distributive is same. When you redistributive is when you get, you will be able to distribute, right? Give some examples of redistribution function performed by the government. So what are the objectives of distribution function? Equitable distribution of societal output, right? Equitable distribution of society output. Not equal. There is difference between equal and equitable. Reservations are equitable distribution. The so-called reservations in employment is equitable distribution. Equitable means, I'll give you with an example what is meant by equity. Equitable means someone who is, say, earning 100 rupees per day and someone who's already earning 500 rupees per day, right? There are two people, 1 and 2. Now, ideal income should be, an average to live should be 200. Okay. An ideal household income per day should be 200. Taking 100 from person 2 in the form of taxes and distributing to person 1, by doing this, what would happen? The person 2 income would be just 400. The person 1 incomes will be, their earnings will be 200, right? So here the person 2 is still doing good, But by making this 100, by providing this 100 rupees to person 1, we are ensuring that distribution of output. Someone who's earning a lot, by using the factors of production, the government provided electricity, the government provided, everything. So you take that 100 rupees and distribute to a poor person. So this is the way the equitable distribution happens, right? So the objectives of distribution function is equitable distribution of output and advancing well-being of the members who suffer from deprivation of different types, like health, education, all of it. Providing equality in income, providing security for people, ensuring everyone enjoys the most important thing, minimal standard of living. For minimal standard of living, whatever you need, the government has to ensure that those facilities are available. The few examples of redistribution function of the government are mentioned here. What are the different examples of redistribution function of the government? The most important one is taxation policies of the government. Taxation policies of the government that we've discussed, most of the examples that I've given is around taxation policies, whereby progressive taxation for the rich is combined with provision of subsidy to the poor farmers. So the progressive taxation, as your income grows, you need to pay higher tax. That is one way of doing distribution. Second, proceeds from progressive taxes used for financing public services, especially those benefit low income households, like schemes of midday meals, right? Midday meals in the government schools. Employment reservations, very tricky subject, topic, but yeah, employment reservations are also equitable distribution of opportunities. Equitable distribution of opportunity, you might question, it is very sensitive topic, I don't want to touch, but the employment provisions, a lot of times people question what is use of reservations. Maybe there is some say 10 to 20% of misuse, but 80% of the times people who are really downtrodden, they were able to come up in their lives, right, for a simple reason of these reservations and preference to certain segments of population. Regulate, there are certain, for everything, where there are pros, there are cons also. We will talk about cons later. We're talking more about pros now. The intention, the good intention side we are talking about. The regulation of manufacture and sale of certain products to ensure health and well-being of consumers, like alcohol, tobacco, all of these, right? Okay. The few examples that redistribution function of government. The government, one is taxation policies, second employment reservations, and some the proceeds from taxes is used for public financing public services, especially for the low income midday meals examples, right? These are the examples how the government perform distribution function. All right, next, what is next? Let's look at next question. Special schemes for backward regions. Just a continuation, apologies, I forgot this point. Special schemes for backward regions, for example, certain states are given incentives and vulnerable sections, certain say reservations for BCSEs, right? Redistribution measures should be accomplished with minimal efficiency costs by carefully balancing equity and efficiency objectives. This is where is a problem in the redistribution function of the government. When the redistribution does, the merit will lose. Someone who got 70 percentile, will not be given preference if he's a general category, but someone who's getting 50 percentile is given a priority in government exam. What happens? Someone who's fit for the job, he's not getting the opportunity. Here, what government is compromising? Efficiency. Government is doing this redistribution at the cost of efficiency, but that cost should be minimal. You can't take someone who's getting 30% score, right? So redistribution measures can be, of course, accomplished with minimal efficiency costs by carefully balancing that equity, giving those extra opportunities for people who are low, and ensuring the efficiency. These two are really, really important. Balancing this is the biggest challenge that is there with the government. Most of the governments are miserably failing in this, but these are the ways the governments do the redistribution function. But the redistribution function will be efficient when the government ensures the minimal efficiency costs and carefully balancing the equitable distribution and efficiency. All right, that's the second role of thing called what is the role of the government in an economy, functions of the government. One, allocation we discussed. Second, distribution to ensure equity and fairness. If you remember these words, no, efficiency, equity and fairness, you will remember what is what, right? Next, we have something called stabilization function of the government. Macroeconomic stabilization function of the government. This is something we will discuss in detail. Three functions: allocation, redistribution, stabilization. We discussed allocation and redistribution. Now we are talking about stabilization function of the government. Again, the same question: how, why, and how. We'll discuss why and why government needs to do and how government do this. Okay, why and how is very important. Why government needs to do this? Can the private sector not do this? And second, how government do. If you are convinced with why, then we'll discuss about how. Okay. So why the government needs to do the question. So everywhere we discussed about why and how. Why the government needs to do the stabilization function, right? What is stabilization? I hope all of you heard in recent days there is a lot of news around the world is getting into this phase called recession. I'm sure all of you would have heard. What is meant by recession? When the economic growth has been consistently down for consecutive period, the output of the goods and services is consistently down, and the employment opportunities are less. We will understand the meaning for recession later, but let's understand the overall feeling of recession. Now you must be reading a lot of news that not Apple, Amazon, Facebook, Twitter, all of them are removing the employees. There are a lot of kiosks in top companies, across the world, not just at one place. So there is a lot of discussion around this recession. So when in this particular scenario, if we leave it to market forces, if the government don't intervene, right? If the government don't intervene in the way how the economy should function, what would happen? The situation will become worse, right? The situation will become worse. The recession will get into a deep depression. There's something called, after recession, it is a cycle. If you know the economic cycle across the world for so many years, this is how it moves on. Like, you don't know which one. For a certain period, there will be a peak in the employment growth, business growth, opportunities for the people. And then after some period, and for various reasons, there will be a slowdown, right? And then world will get into a recession phase, and then deep depression, and then again there will be some kind of recovery, and again it will reach to peak. It is a cycle, like this it will move, right? So no, don't know where it started. So, but this is something will happen in a natural. It's like in life, highs and lows. Everyone will have certain highs and certain lows in your life. There'll be a certain period where you are really doing good and you had great success. There'll be certain period where you have lows. So how do you react when you are having that, when you are in such a low situation, is something that you would decide and you take help of someone, right? Similarly, in an economic situation, when there's a slowdown and there is a recession, government has a huge role to play. If we don't, if the government is not involved, it will be a big problem. So, what is the basis? I hope now you understood why the government needs to involve in the stabilization, of economy. What is the function, stabilization function of the economy? We will understand. Okay, explain the basis for stabilization. What is the need for stabilization in the market economy? As a market economy is simple terms, it's a private economy. Government has literally nil or insignificant role in the what should be produced and how should be produced. All of those or the factors of production are in control of the private sector. The market economy, wherein the demand and supply determines how much goods should be produced, what quantity it should be produced, which good to produce. All of that will be decided by the market forces. Market forces are vitamin D and vitamin S, demand and supply. These determines, if there is no demand for the pen, the manufacturer will not produce pen. They'll produce something else, right? Now there are different types of pens that have come. So they'll produce the electric or say there's some other pen. So depends on the trend, depends on the market requirement, the people do produce, right? That's the called market economy. So what is the need for government involvement in a stabilization function? In economy, business cycles, as I mentioned, are a natural phenomena in an economy. They tend to occur periodically, as you cannot say for how much period. Sometimes 3 years, sometimes 5 years, sometimes 4 years, like that it functions. Okay, yes. Business cycles are natural phenomenon in an economy, and they tend to occur periodically, as I mentioned, 3 to 5 years. Sometimes it may take even more than 5 years. In the absence of appropriate corrective intervention by the government, what would happen? The instabilities that occur in the economy in the form of recession, inflation, etc., may go for a longer period, right? May go for longer periods, causing enormous hardship to people, especially the poorer section of the society, right? Assume people lost jobs. You must be wondering how it impacts the poorer section. The income levels, the people who are buying things will not buy, right? So the goods will not be, the incomes of government will come down, the revenues of government will come down, the welfare schemes will not be able to run. So it is also a possible scenario that a situation of stagflation. Have you ever heard the word called stagflation? Stagflation. Currently, we are at this particular scenario, so that's why we should discuss this stagflation. Currently, the world's economy is at this stage wherein there is high level of inflation. I'm assuming all of you know what is inflation. Inflation means increase in price levels. The be it vegetables, be it whatever you as an individual buy, increase in prices. That's inflation coupled with growth, with no growth. So generally it is expected in a phenomena when there will be higher inflation, whenever there is a lot of money in public hands, there will be an inflation. That's a general scenario. But there's also a scenario wherein there is less production and there is a high demand. So there is an inflation. But this inflation without any growth, there is no growth year on year, but prices are increasing. The production is not increasing, but the prices are increasing. Companies are not producing the goods as it is not profitable to them, but the prices in the in the market are, increasing high and high every day. So that this is called stagflation. Inflation, stagflation. Okay, stagflation. You should remember this. This word will be heard many times. What is meant by stagflation? Stagnation with inflation. That's called stagflation. It means inflation, high inflation with no growth. Generally, inflation and growth are kind of parallel things. When there is a growth, there is generally inflation. But in this scenario, opposite, there is inflation but no growth. That is called stagflation. Right? So it is also possible that a situation of stagflation may set in. This is what is the current scenario of the world. Especially the US and Europeans have seen the highest level of inflation in their lifetime. In the last 30-40 years, that level of inflation was not there in Europe. I was speaking to a friend in Europe. He was talking if they keep their money in the bank account, they don't get interest earlier. They literally get 0% interest. For example, we keep our money in the bank account. Even in your savings account, generally you get 4% interest. There you get nil, right? Why? Because their interest rates, the loan interest rates, also very low, 4%, 5%. Now the inflation levels are at 11%, like way higher, like which is higher than what we have in India. So that's why the world is moving towards stagflation. It's started up set in Europe with the Russia and Ukraine war, and all of this now is having a spillover effect to other countries. US has it. India is okay, slightly better in terms of how we are, but yes, we also have employment issues, all of it. The situation of stagflation may set in. If the government don't intervene, what will happen? It will create more problems and make problem more intricate and more complex, right? So that is why government has to involve. Government has to involve in the stabilization function of the stabilization function, right? Stabilization function. So stabilization function is concerned with the performance of the aggregate economy. As we said, macro economy. I believe you know the difference between micro and macro economy. Micro economy deals with a particular individual, household, particular company. Macro economy an economy, as a state economy, um, as a country economy, right? So the stabilization function focuses on these aspects: employment, capital utilization, overall output and income, price levels, balance of international payments. We'll talk about exchange rates. The India exchange rate, for example, in last few months, in 6 months, have jumped quite high. It used to be at 76 and all. Now it crossed 80. So the way the international payments, the imports and exports, and also the rate of economic growth, there has to be a healthy growth. Always there is a requirement to have a healthy growth. It's not good even if you have like 30-40% of the growth consistently for few years and then stop. There are very few countries who register. For example, India is considered as one of the fastest growing, as we generally grow at 6 to 10% growth year on year. But this is not there for countries like Japan. For example, in a country like Japan, if you bought a house say 10 years back, let's say $1 million, the house would have been more or less at the same price even now, because there's not too much of inflation there. Recently there are changes, of course. No, I'm not saying exactly 1 million, probably 1.1 million. Imagine India, if you bought a house say in 10 years back, a house, now the price would have been somewhere double, right? So the economic growth, the decent economic growth is important. So the stabilization function, the government focuses on these: employment, growth, price inflation, exchange rate, right? And overall output. Output is nothing but GDP. We will discuss about this GDP and income levels. So these are the main concerns of government, and they work around these areas, different schemes, different things that they come up with. For example, tax incentives. Are government spending more from their pocket to increase the economic growth? For example, during COVID time, what government did? Government gave things at a discount rates. Government has waived off the interest for businesses for particular 3-4 months, considering the situation that we had then. These are the things that government has done to stabilize the economy. All of a sudden, when the COVID has come in, there's so much of, you know, growth, a lot of employment lost, and the business were not able to sustain. All of these reasons. So what government has come up? Government has come up with certain schemes for the MSME sector, certain schemes for private, high, big companies, loan waivers for some interest rate reduction, some, certain time period they don't need to pay interest. All of those schemes government has come up. So that is one of the stabilization function of the government, right? This government stabilization intervention generally be in two ways. One is through their monetary policy. This we will discuss in the chapter 3. And another one is fiscal policy. This we will discuss in chapter 2. Monetary policy, that is money market, RBI, and all the how the money flow in the economy is there. All of that is by increasing the interest rates, by decreasing the interest rates, all of that done through monetary policy and fiscal policy. Fiscal policies is what we are talking about: announcing certain schemes, allocating more budgets, reducing the budget depends on the requirement. All of those, the monetary policy and the fiscal policy. Monetary policy has a singular objective of controlling the size of money supply and interest rate in the economy. We will discuss this in chapter number 3. Please note down this. We will discuss in chapter number 3. What is monetary policy? I am not spending time here. Fiscal policy will spend time. Fiscal policy for stabilization measures attempts to direct the actions of individuals and organizations by means of expenditure and taxation decisions of the government. For example, during slowdown, what government do? Reduce the tax rates. During the COVID and before that, there used to be a 30% tax for the private companies. Now the government has reduced that to 25%, right? When there was a slowdown, so that when the tax rate is reduced from 30 to 25%, what would happen? That 5% of extra you know income that is available with the private sector, they invest back into the business, right? So that essentially generate more opportunities. So these are the some of the fiscal policy measures. One is taxation and expenditure policy. Taxation policy example I gave: reducing the tax rate from 30 to 25% when there is a slowdown, right? And spending expenditure, for example, government giving free ration to the public. Some earlier they used to pay, but considering the COVID and people are not having income, giving that free ration to the public. The expenditure policies through government, every decision of the government which impacts the economy, which impacts the money flow, which impacts the finance, is a fiscal policy of the government, right? So these are the two ways: monetary policy and fiscal policy. During the recession, the government increase its expenditure or cuts down taxes. This is what I've explained so far, and adopts a combination of both so that the aggregate demand is boosted with more money put into the hands of the public, right? On the other hand, to control inflation, in other scenario, to control inflation, the government cuts down its expenditure or raise taxes. This is another scenario. Stabilization is both sides. When there is a high inflation and there is low growth or recession. So when there is a high inflation, prices are jumping, and what government do? when prices are jumping means people have a lot of money to buy. So take that money in form of taxes, collect from money, collect money from people. So in that way, and through monetary policy, increase the interest rates for accessing the credit. So through this ways, government can influence the money flow in the economy, and government can stabilize the economy. We will discuss in detail as we move forward. This is your second class. Don't be confused if you are not able to get it. All right, but you will understand as you move forward, and you will be able to connect dots. What is monetary policy, what is fiscal policy, and how the government increasing tax rates would reduce the money supply in the economy. All of it we will you will understand slowly. All right, with this we are through with the chapter 2 unit 1. It took 2 classes, chapter 2 unit 1, the fiscal functions and overview. Let's quickly summarize. We discussed what is fiscal functions. Fiscal functions are means related to policies related to government expenditure, revenue, especially taxes. So what are the functions of the government? Why the government has to involve in an economy is a question. Everyone support free markets. Free markets means the demand and supply has to decide which product to produce, how much quantity should be produced, what should be the price. All should be decided by the market forces, demand and supply. Government should not intervene too much into it, but despite of it, government do have certain role in the free economy or the market economy. Those are three different functions. One is resource allocation function, resource redistribution function, resource stabilization function. In the resource allocation function, we took example of vaccines, example of essential commodities like onion, tomato, medicines like this, and wherein government has to intervene whenever there is an imperfect competition in the demand and supply, when there is monopoly. All of these things, when there are there, government has to intervene and correct those so that the resource allocation can be done properly. And then we spoke about resource distribution. In the resource distribution case, we discussed about why the government has to do the resource distribution for the equitable distribution of income, wealth, and opportunities. The concept of reservations, providing free ration to the public, high taxes for the people who are earning high, low taxes for who are earning low, and giving it to poor people. All of those are redistributive function of the government. If that is not done, if the government is not done redistributive function, what happened? There will be high imbalances in the society. That is not good for a country. For every question of resource allocation, resource distribution, stabilization, you need to answer those two questions: why government needs to do and how government can do. These two answers you should have in your fingertips. All right, so that is about resource distribution. And then we spoke about resource stabilization function of the economy. The stabilization function of the economy by the government. Why the government has to do, we discussed. In an economy, in a market economy, in a free economy, free doesn't mean the market economy where everything is decided by the demand and supply. There will be a certain business cycles wherein a certain period you will have a growth, and then there will be a slowdown, and then recession, then slowly pick up growth. So during these cycles, whenever there is a recession, whenever there is a high growth, government has to intervene. Whenever there is a recession, especially if the government don't intervene, what would happen? The situation will become worse. Things like stagflation would come into picture, and that will make lives of especially poor people more miserable. They will not be able to afford a lot of goods, right? So that is the why stabilization function is example. The stabilization function classic example is the measures that were taken by the government during COVID scenario, right? The stabilization function, when there is a slowdown in economy, government pump more money, sometimes through their fiscal policies, sometimes through their monetary policy. Monetary policy we will discuss in the unit 3. Fiscal policy is whatever the government take decisions which impacts the economy. Those are fiscal policies, right? Fiscal policy we have discussed already. Fiscal functions, fiscals means government expenditure and revenue policies, increasing taxes, reducing the taxes, increasing the interest rates, reducing the interest rates. All of those are fiscal policies. All right. So with this, we are summarizing chapter 2, unit 1, fiscal functions and overview. All right. So in the next class, we will be covering chapter 2, unit 2, market failure. Very interesting. We have briefly touched upon market failure in this class also. Yes. Have a good day.